Yeah, hello, good day, everybody. This is Trader for Life. I've already explained to you the last time that I will share a video to explain some of the content of the chart. So now I'm going to tell you the details of this chart, like this one that is displayed now. So I will tell you one after the other what it contains. This 123 chart, it contains both the BTMM and ICT content. So for now, like this one, like for BTM, I have for TDI. This is TDI down low. What we use TDI for? We use to measure um, the extreme at which we are expecting reversal or continuation. Like under TDI, we have what is called shark fin. We have what is called retest, and we can also use for overbought, oversold. Presently, this one where we have when we have shark fin, when we say shark fin, which means we are expecting the RSI. The green is the RSI, the red is the signal, and the yellow is the market baseline. This yellow is show the trend on the higher time frame. It show the trend on the higher time frame. Whenever the market baseline, the yellow, is below 50, this is 50 level, this is 32 level, and we have 68 level, but presently it's not shown here. Whenever the market baseline is trending below 50, which means we are in the downtrend on the higher time frame. And when we have what's it called the the RSI, the green, below the market baseline, which means it's downtrend. Whenever the RSI, the green, cross the market baseline, so we are expecting what is called a change in the movement, change in direction. And once it cross market baseline and retest, I'm talking about the RSI, the green. Whenever it cross up and retest the market baseline, the yellow, that's a break and retest, which means a break up and retest at this zone level, 50 level. Then we're expecting continuation, break and retest, which means it break, retest, and continue. So there's a document on this TDI. If I seen it, I will share it in the group. So it's majorly being used for trending, trend direction. So mostly used by BTMM. Also, we have stochastic. Also detects overbought, oversold. When the stochastic is above 70 and above, that is oversold. Sorry, overbought. When it's below 30, that is oversold. So we have level here 30, 50, 70 and above. So that is stochastic. And within the stochastic, I have a MACD here. This Axon is called Axon, like MACD Axon. So I use it to detect divergence. Majorly I use stochastic and this Axon indicator to detect a divergence. I used to, instead of TDI, I normally use. So as I said, when we are expecting shark fin, which means the on TDI, which means the what's it called, RSI, the green, it cross from above. This is a sample of shark fin. RSI green cross from above, it cross the red line, that is signal, and Bollinger Band. The Bollinger Band is this blue. We have two. We have upper Bollinger, we have lower Bollinger. So whenever the RSI, the green, cross from above, it cross Bollinger upward and now cross it back inside with the crossing of the signal downward, that is shark fin, which means it goes up, then it cross back. It's a sign of reversal. Cross up, sign of reversal. As you can see here, look at the price here. See, you can see that there was a reversal, pullback here, and at the same time we have overbought. The stochastic is showing overbought, while at the same time the RSI is crossing the Bollinger Band and the signal at the same time at above this is above 50. So this is a signal here, this is a signal here. You can see the price also close. So other thing that we have in this chart, we have I have chart here. This is this one indicate the daily chart, this one 4-hour chart, and this one weekly chart, so that I can overview what is going on in the daily in one chart. This is what is going on here. At the same time, I have gap. The gap is being the gap on ICT is being called fair value gap. It's being measured when there's a gap between three candles. You measure the gap between three candles. There's also video on that one. I will share it by Michael. He will explain better, so you need to watch that one. So this rectangle gray, light gray, this is a gap, the sample. This also is a gap. This side here is a gap. Where do you have a gap again? This way. Those gap we use it as a point of interest for TP or reversal. For TP or reversal, we use it. Under ICT, there's a video, I will share it with you. Likewise, we have EMA. I have EMA 13, 50, 200, 800. It's being used by BTM, and it is being used for dynamic resistance or TP. You can use it for TP or resistance. Like this one, you see, there's a resistance here, and you have a reversal at this EMA, the reverse back. Also, we have this psychological level, this black line here, this psychological level being used by PTM. It is show at the beginning of the week to show you the first 8-hour candle. This is first 8-hour candle. If you count it, 1, 2, 3, 4, 5, 6, 7, 8. The first 8-hour candle in the beginning of the week, they are used for psychological level. You see now, this here we have this serves, they can also serve a resistance in the future day. So here we have at a reversal here we have what is called price rejected at the psychological level, price also rejected at the fair value gap, and at the same time at the EMA zone. So that's a conferences. At the same time, we have shark fin, overbought, all of them happening at the same time. So we have a reaction of the price at this place. So this is gap. This is gap. What else do we have? We have what's it called? Demand, supply and demand. This yellow is a demand zone on the higher time frame. This demand zone, we have price at demand zone. We expect it. We have also this demand zone. The red is a supply. This is supply zone. This is supply zone, demand zone. And we also have a trend line on H4. This one is a trend line on H4. This blue line is a trend line on H4. So we also have other support and resistance like this one. This is D1 support. This is H1 support, higher time frame support and resistance. When you have solid one like this, which means it has not been broken, the support has not been broken on the H4. This one, dotted line, has been broken on daily. This one has been broken on daily, which means the price have pierced it, passed through it. So what else do we have on this chart? I think that's all. So the chart contains both the for BTM and ICT concept. And I normally use this H1 as my trend. You can also enter here. You can also go to lower time frame to refine your entry. So this is D1. I follow the D1 direction. If it is breaking down, which means on H1 I'll be looking for trend going down. If it broke up, so on H1 I'll be looking for H1 direction. So that's all on the chart. So those are the content. We have TDI, we have stochastic, we have supply and demand, we have fair value gap, we have H4 trend line, and we have higher time frame chart, and we have psychological level. So that's all for now. Thank you.